Now, let's say that instead of writing the journal entry correctly, because they hadn't hired you as their bookkeeper, that piece of equipment was captured like this. Yikes! That's gonna create some problems, won't it? So, now we have an equipment expense account that is lower than it should be, and a tax expense account that's higher than it should be. I know, tax expense is always higher than they should be, right? Once the error is found and verified, we can correct it. Now, generally, there are two ways to fix this. One is to reverse the incorrect entry and use a second journal entry to record the transaction correctly. Or make a single journal entry that, when combined with the original but incorrect entry, fixes the error. That's the approach we're about to use. So in this case, where we've got too little in the equipment expense account and too much in the tax expense account, we can reverse this problem with a single entry that looks like this. We would add a memo on this entry to clarify that it's correcting an incorrect entry on the original date. So now we've got both accounts corrected in a single entry. Easy, right? Well, not always, but in this case, yes. Let's complete this round with some additional thoughts from a friend and colleague of mine.
Reconciliation is one of the fundamental things that we often think about with bookkeeping. It's kind of the end of the month, tie everything up in a bow and finish off the whole process. And there is just such satisfaction in getting a bank reconciliation or other reconciliations done. So we've heard about some of the very specific things that we might do to correct errors, but a couple things that I want to point out. The reconciliation process itself is really allowing us to take a step back from being in the day-to-day entry or processing of transactions and kind of look at things big picture. So when we look at reconciliations, there's a few things that we talk about to avoid making errors. So first of all, when we're going through the reconciliation, if we're seeing transactions that are the exact same amount, reasonably close on the dates, we start investigating those. Or if we get all the way through the reconciliation process and we see a lot of transactions that haven't cleared, we definitely want to dig into those a bit and determine what they are. They could have been duplicates. They could be complete errors and mistakes. It could be something like they've taken a Uber and the tip was brought in later than the actual base fare. And so those two things never cleared, but the full amount was put in the system. Things like that. There can be all kinds of random things that can be an issue. And when those get cleared up, that can significantly change what is looking, what things are looking like as far as expenses or income or whatever. Also looking at deposits that have never cleared, that's even stranger than expenses that haven't cleared sometimes. So going through all of that is really important. We have had situations where we have gone in and done reconciliations and there has been a swing of hundreds of thousands of dollars on the client's books because of transactions that have never cleared. We have found fraud as we've gone through them. That is not our main purpose, and we don't guarantee that we will, but there are times when we have seen things go through and we're like, wait a minute, this is really strange. Did you do a transfer? How come I'm not seeing it in the other account that you always transfer to? Things like that. So it's really important that we look at that. But remember that reconciling is not just about banks and credit cards. There are other accounts that can be reconciled and should be reconciled. Prepaid expenses, accruals, loan balances, all these different types of things. We have seen many times as we have done reconciliations that we have found mistakes and errors. And so going through those processes is very important. We shouldn't take it lightly. But I will also say that I don't talk to the client about the bank reconciliation and how long or how quickly it happened. They know that it's getting done most of the time. We talk about it during your reconciliation. We found XYZ that we think you should be aware of, or whatever the case is. But it's kind of one of those things that the client doesn't always want to know how the sausage is being made. It happens. We're going to do it. We correct errors. We have found, in fact, recently, one of our clients had a situation where they sent an invoice for the same exact amount to the client. They thought it was a mistake. And so they actually refunded the money to the client. And during the reconciliation process, we were like, wait, that's not what happened. This is what we found. And so we can save our clients a lot of headache and mistakes and fix things that need to happen. And so reconciliation is not nothing. It is something. It is a big something that as bookkeepers, we need to be looking at and really reviewing and keeping up with to make sure that we're providing the information our clients need to understand their processes are going well, the information is correct, and ultimately to find any mistakes that could be in the system and get those corrected.